Welcome to the Swing Trading with Cycles channel. It is February 5th, 2023, a Sunday. We're going to do our update on the U.S. equity indices. So we're going to look at the S&P. We're going to look at the QQQ, the Nasdaq, which is the Nasdaq 100. We're going to look at IWM. And we're also going to look at the Dow. So that's DIAs, the ETF that represents it. And we'll look at a few ratios as well to kind of see which indices are outperforming, which others. And it'll actually also be somewhat obvious which ones are outperforming as we kind of look at the price action. As always, if you're new to the channel, welcome. Definitely take a look at the pinned comment. Ton of great background information for you. We cover all asset classes on this channel. Precious metals, crypto, uranium, everything. You can see links to playlists that has all the videos for that respective asset class. You can sort in time to get a sense of which is the latest video to get kind of caught up. I'll say in general, before as we get into the S&P 500 daily chart here, we're at a critical juncture where it is possible that the low in October, which as we can see in the daily chart here, is this is October 13th. So October 13th so far is the low, and we know that because it's a swing low, right? Just I'll zoom in, just make sure everybody can see this, right? So once we cross, this candle marks the low. We printed that low. This is the S&P cash. So that low is at 34.91.58, and the high for that day, right? So this was a big reversal day, right? We had this candle was very red, and then the reverse went green, and the high for that day was 36.85.41. And there's a whole video that talks about swing lows in that pinned comment, so definitely take a look. Once we crossed above that level, that creates the low, and now notice the next day, we actually got above that level. You can see like this candle gets above that level. Again, look at this line here. And this blue line is a 10-period moving average, the 10-day moving average. And you can see we cross above it and then we fail. We just fall out the other side. The following day, it's just an inside day. Doesn't make a new high. Also doesn't make a new low, right? Look, gets nowhere near the high, but also nowhere near the low. And then we close above the high from this candle, right? So once you get above that high, the high of this candle marks the low, that is a swing low, and that is your potential bottom. And then like if we just kind of zoom out, you can see we did dip for a couple more days, but this was a higher low, right? Then we made another higher high, higher low. Like I'll just kind of draw it out real quick, right? So we did that. That's how you see this kind of in real time. Now this was scary, right? Because that's a lower high, but it's not a lower low, and we just kept going, right? Little choppiness here. This was also scary. I mean, look at that, right? And I won't go through the whole thing, but you can see we then entered this period of choppiness, and now we're back into an uptrend, right? So like we chopped around here, but then we did this, higher low, this, higher low. So now are we going to do this, higher low, and then keep going? That's what we're looking for. Now, just understand this. We're at the juncture of the market where people are so bearish that everyone is going to be looking for a top at every turn. And as it turns out, we may be going into a daily cycle low right now. That's what that dip might be. Now, obviously, the reverse might happen. So we're doing this, we did that. We could do this and then that, right? That would be the scenario where we're going to go down and make a lower low. But notice this isn't going to happen in one day. It's going to happen over a period of time, and we'll be able to tell. Once we make this low here, and then we come up and we're not able to make a higher high, that's going to be your warning sign. Like, oh, maybe, if you're even aggressive, you go short after this low is printed. We get this again. So just to be just kind of crystal clear here, again, there's a whole video on swing highs as well. Swing highs are how downtrends begin. These would be swing highs. These would be selling opportunities, right? As you see the market confirm to you that it's making a lower high and starting another leg lower that you would expect is going to make a lower low. These are lower lows and lower highs. So that's the bearish scenario. That's what everyone assumes is going to happen and is going to assume is going to happen every time we have a swing high. They're going to expect this, right? Now, the way we can make, and you can make money off this, obviously. You can short, right? But if we instead do something like this, it's going to catch a lot of people off sides. Because to be clear, people aren't even understanding the nuance of this. They're just expecting a waterfall down. And so if the dips keep getting bought, again, so they become higher lows, That's an environment where one can make a lot of money because everybody is super bearish. And that just means at some point people are going to capitulate and they're going to continue to fuel the market higher. So you don't have to predict or have some big thesis like, okay, the bottom is in, or this is definitely a bear market rally. You can just follow price and you can make a lot of money that way. So again, we would expect at least a few more days down that we're probably getting a daily cycle low. And we know that because this is a swing high, right? We closed below the low of the candle that marks the high. And that high is printed on day 27, which is what we're having here, which is what this 27 means. That previous daily cycle, the high was on day 42. Notice this high is higher than that high. That's positive. Also higher than this one. That these are all good signs, right? And so as we look, the real question though is going to be, what does this do to the weekly chart, right? Because this is this week 15 or week 16? I think it might be week 16. Yeah, so this is actually week 16. So you find yourself in a situation where we're getting later in the weekly cycle. So we know we're really late in the daily. We know we're later in the daily cycle, but we're also kind of late in the weekly cycle at week 16. I'll get rid of some of these lines so we can see it more clearly. And so the same way that we have that uptrend on the daily chart, there's an uptrend on the weekly chart as well. And let's just draw it out so that we can see it very clearly here, right? Like this thing. Made this high. I mean, if we want to be really kind of micro about it, let's just draw it out. So again, this is that low on that day in October. I forget the exact date, but we had that big reversal, big green candle that started out red for the day, right? So we made this high, higher low, high, higher low, right? Like right around there, call it. Higher high. Now that's scary because that's a lower low. But we recovered since then, higher low. And so now the question is this daily cycle decline just going to be a higher low? Like let's say comes down to like here, like around the 4,000 area, let's call it, and then resume the uptrend. Again, same kind of idea that we talked about on the weekly chart, or excuse me, on the daily chart, except, obviously more significant if we see it happen on the weekly, right? And so these are all signs to look for that people may get caught off sides being too bearish. Now at the same time, it's already week 16, so we can't expect. I mean, let's just see when we were in a bullish mode. Okay, so we had a cycle that ran for 26 weeks. We had one that ran for 22, one that ran for 24. So we could still get quite a few more weeks out of this. To be fair, the also other thing that's significant is that we closed above the high from this capitulation. This huge candle, we talked about it in real time, previous videos. This is a huge sell signal, and we did get bearish follow through the following week. Like this was the week of the Fed meeting, right? And I would encourage people go listen to the last FOMC press conference. He was decidedly less negative, right? Like the tone was clearly different. But we closed above that high. That's important. And I'm going to measure how far above that high did we get, right? So like that's the high right there, and we got up to here. So we got about 2.25% above that high. So this is the S&P, and the S&P is actually one of the weaker indices of the four that we're going to look at, and that's why I'm measuring that, because the percent above that high that and then this index got will actually give us a sense of how strong it is, right? Like how much of a rally were we able to muster above that level. Obviously, they all pulled back on Friday. And the big thing that you want to look for is that daily candle. What it's done is created this structure on the monthly chart. So that daily candle in October is now a monthly swing low. There are a lot of lines here. I'll make sure that we're looking at the most important ones. So I'll get rid of a lot of these. We'll just look at... So you can see this red line here. So this candle, the high of this candle is 39.05. So the same way that we had to cross above the high of that daily candle to form a swing low, we had to do the same to the weekly candle. And this is the monthly version. And notice we've dipped below there these last 3 months, right? So this was October, right? What did we do in November? We went below that level. But what did we do? We recovered, right? What did we do in December? We actually closed below that level. What did we do in January? We got back above it. Another way of thinking about this is just consolidation. Look at these 3 months. Look at that. Like, this is all, like, just, you can draw a line, a box. Like, it's like, and forget the wicks for a second. we just like this is 3 months of kind of staying within this range, right? Just kind of going back and forth. And so in some sense, you could say that's setting up this kind of explosion. And of course, many were expecting that the explosion would be to the downside, but what if it's actually to the upside? And this is our long-term bottom, right? We topped out on month 22. It's totally possible that we made our bottom on month 31. Now, again, this could still roll over and make a lower low, but it's not going to all happen in one day, even 1 week. There will be time to get on the right side of the trend. But right now, the other thing to note, what do you notice? Look at these 3 candles I just talked about, how they consolidated. Do you notice where we closed so far? And now, this is a monthly candle, so we haven't closed, I should say. We still have to close the month of February. But right now, we are above the high of these last 3 months. That's super important. The next really big level is going to be this cluster. Look at that wick. We got all the way up there and got rejected. We got all the way up there and then got rejected. So that's around 4,300. But we obviously have to cement ourselves above 4,100 first. And and again, as we just talked about, we're going through a daily cycle pullback. So it's going to be really a question of how strong is that daily cycle decline, right? And so if you're scenario planning, this is potentially month 4 of a new monthly cycle, of a new long-term cycle. And we can pace ourselves. The last long-term cycle had a rally that lasted 22 months. Now, notice the difference. This was month 4 of the last monthly long-term cycle, and this is potentially month 4. Notice that difference, right? We covered a lot of distance, right? Let's just see, what is that percentage-wise? We had already rallied 33%, right? Like from that low to that low, and let's say from here to here, we've only done about 13%. So that's actually sizable for a huge index, obviously 13%, but nowhere near this like steep vertical move. So this was obviously more recognizable, like, oh yeah, we're this is a launch pad, and then this was a nice little higher low. But you've got to be prepared for both scenarios, right? It's possible that that's the bottom, like this was the bottom, and that's going to catch a lot of people off guard. And also if we look at the quarterly chart, right, we're just poking up above to make a swing high on low, on the quarterly chart. These are all signs of a bottom, right? And obviously the quarterly chart doesn't close until the end of March. And so we're going to have to, there's still a lot of trading to happen between now and then. So let's look at the other indices, same kind of principle, obviously different levels. We'll look at QQQ, which is the Nasdaq 100. So same idea. In this case, it was day 24. And you can see closes a swing high, just like the S&P. Didn't quite get all the way to green, to red. Still stayed green. And notice this was a gap, right? We gapped up. We did not fill the gap yet. So that gap gets filled by getting to 303.43, and we closed at 306. Wouldn't be surprised if we have a gap down opening, which gets us closer to that, back to that gap. Now, because this is probably a daily cycle decline, I don't know that we stop at that gap, right? So this whole move was 53, call it 54 points. So if we did a 50% retracement of that, right, gave back like, call it 26, 27, that gets us back to like 288 in that neighborhood. And that would still be a nice healthy uptrend, right? Like that's just a scenario here, like, if we're kind of thinking. And the other thing, what I want to call one's attention to is on the weekly chart, it's the same count, week 16. Notice how much higher above this we got. So the Qs were able to get 5.5% above the high from that meltdown week from the FOMC. That's telling you the Qs are outperforming. And we'll look at a ratio chart that makes it even clearer. And again, same structure for the Qs. Totally possible that we had our low here on month 30. So the Qs did top out earlier. So the S&P topped out on month 22, which was January. The Qs actually topped out in November 2021. So, I mean, this has been a really long decline. There's no reason why this can't be a low. And it doesn't mean this has to be a super bullish cycle that goes back to all-time highs either. Just to be clear about that. But look at this decline in the context of these others, right? There's no reason why we can't get a sizable rally off of this now. I mean, this is obviously, now we're talking more like, that was your, GFC crisis. And this was obviously your .com sort of collapse. So not saying we haven't had declines worse than this, but this is sizable as long-term cycle lows go. And for the Qs, that swing low is active. The monthly swing low, important levels to be aware of. That's active above 284.60. Let's look at IWM. Let's just look at where that. So the IWM is not quite as high above its swing low. So for IWM, you really need to get above. Stay above 184.24. And for IWM, also kind of similar to the Qs. This was your meltdown week. I mean, look how much higher we are above that meltdown week, right? Like we just kind of left it behind. So the Qs made it almost 7% above that high, and we actually closed much closer to the highs than the Nasdaq 100. In terms of the daily cycle, where's IWM? So let's see. So that was day 24. So just like the Qs, that was day 24, and you can see we do have a swing high. Well, actually, wait a second. We actually don't have a swing high. See, like these kinds of little details are actually super important, right? So the IWM actually of the indices did not close as a swing high. It didn't even make a new low. It didn't make a new high either. So Friday was just an inside candle. And so you'll really want to be aware of what happens. We're really still inside the range of Thursday, the day after the Fed meeting. So the high on that candle is 199.26 and the low is 194.35. So it's not until we get below 194.35 that we'd start to get kind of especially worried. And I suspect it's going to get pulled down there with the other indices. And you can see the 10-day moving average is down here. At some point, we're going to cross below that as well. So, we're actually quite a bit elevated above that, right? So, well, not that much. Not that much, by about 2.5%. But that's still obviously a nice little bit of downside. And again, same thing on the weekly, week 16. And let's finally look at the Dow, which, as it turns out, is the weakest of the indices. It was the strongest at one point, but it's kind of stalled out here. So notice it made a daily cycle low way up here, whereas the other indices were like down there. But since then, it rallied. It's had this feeble rally that topped out on day 14, which is January 13th. And then we had this sharp move down. And now we seem to be kind of printing a lower high here, right? So just to be clear, this is actually Fed Day, February. So February 1st. And it ended as a big doji, and the last 2 days have just been inside that range. So that's we need to break out of that range, right? The low there is 335.58, and the high is 343. We're closer to the downside. Well, we're kind of in the middle, actually. So a little bit of an annoying spot to be in, not a ton of edge there. But look at the weekly chart. Now, this is really important. Notice the S&P 500, small caps, and Nasdaq were all above their meltdown. So the week of December 12th, when the markets melted down because, Jerome Powell was, perceived to be so hawkish. We're way below that high, right? That high is at 348, and we closed the week at 338 here, right? And so you can see, just to be even more specific, every week since then has actually just been kind of consolidation inside the range. So we did poke down below that range the following week, but then every week after that has just been inside. Now, we did start a little rally up, and it looked like, okay, maybe we're going to test the upper end of the range, and now we've pulled back. So it's going to be interesting to see, can we break out of this kind of wide, ugly range we've been in? But, the Dow is now clearly underperforming its peers. But look at this. Look at how this big candle in October, again, potential major low for the indices. Look at how these 3 months, also consolidation, just like the S&P, but at the upper end of the range. This is essentially a bull flag. But again, it is still consolidation, not really going anywhere so far. So we're going to have to see, which way this thing kind of tips its hand. So let's look at a couple of ratio charts. Let's look at IWM versus QQQ. Because there may be something happening here, right? So we just had a little swing low here. Let's look at the monthly. How does that look? Right. So on a monthly level, this thing has been kind of down only for a really long time. You can just see, printing, one swing high after the next. One major swing, and all lower than the last, right? And so now a question, are we starting to turn the tide here? Are things changing, right? Like this could be a little bull flag. Unclear if that's really what we're seeing. If we look at the weekly level, this is trying to print a little higher low versus this. So we do have a series of higher lows here. So this is telling you that IWM has been sort of creeping up on QQQ. But important to note, what's QQQ doing relative to, let's say, S&P? Because that seems to have made a major bottom. So that's important. Look at that. We talked about this in the previous video. Look at this big decline, and notice it's been outperforming S&P for a long time, and it now seems to have bottomed. So if the Qs seem to have bottomed versus S&P, and the small caps IWM seem to be doing better than the Qs, does that mean the small caps are doing better than the S&P? We're gonna have to see that. But just before we do that, look at this daily cycle advance. I mean, this is a furious rally. Look at that. Look at this decline, right? So this is definitely a potential major bottom again for QQQ versus S&P. But what does IWM versus S&P look like? So this is actually more just flattish. So that's interesting. Or I should say, it has been flattish. Are we about to have a little breakout here? Like, look at this massive range it's been in since basically the beginning of January, not really doing much. And I mean, it depends on where you draw this line, right? Like, you could just say, oh, well, the line is all the way up here because that's where this high is. Or you could say, let's be more generous, and it's actually more of like a zone, right? Like, that's your downside, and obviously you had some support here at some points. But you can't, like, either way, you can see this is trying to make a little move here. What does the monthly look like? That was your weekly chart. That was your daily chart. So on the monthly, you can see this, wow, ugly rounding top. So kind of similar to how it's massively outperformed the Qs, and you have these swing highs, but you have a green month in February followed by that green month in January and a potential low here. So what this is telling me is that the S&P is not necessarily the place to be. If anything, it might actually be the small caps. So you don't want to, I'm not looking, and we're going to look to see, obviously, how this daily cycle decline kind of unfolds. But this is definitely telling one you might want to diversify. I mean, look, we're about to break. If we break above this move, like you could see a move to up here. And again, this is a ratio chart, so this isn't telling you about the absolute move, the absolute move. But I mean, this is definitely suggesting good things for IWM, right? And it also kind of suggests something good about the markets as a whole, right? Because risk appetite would be higher if IWM was moving up. All of this could reverse, especially as we get the daily cycle decline. IWM could take a massive hit, and this could just roll over again. So we will need to be kind of cognizant of that for sure. And let's look at the Dow. That has massively outperformed, and now it seems to be underperforming. We could really see that on the monthly chart. So we had this period. So from this swing high is from January 2019. And since then, this is the Dow versus the S&P 500. We've just been printing swing high after swing high lower, right? But then we made this bottom, what is that, December 2021. So that makes sense. Right when this downtrend started for the broader markets, even though the Dow was moving lower, it had been massively outperforming the S&P. Look at this very clean uptrend, this series of higher lows. But now we have this like really ugly swing high here, right? So this is telling you the Dow may not be the thing that's going to outperform in 2023 the way it did in 2022. And if anything, what this is telling me is when we get a weekly cycle decline for the broader markets, it might even make sense to short the Dow versus the other indices because it's already the weakest one, right? Let's look at what this looks like for the month, for the quarterly. Ooh, look at that. So the quarterly is still an inside candle, but it is threatening to make a new low here. And that tells you that the yearly is also red, which makes sense. This is obviously a very, very early candle, but this could be telling you something about this could be the continue. I mean, if you look at this, right, like this could be the continuation. You made this low. This could just be another lower high before another move kind of lower. So all that to say, the Dow's chance to shine may have been short lived. It may have just happened and it's starting to peter out. So that's something that we'll definitely continue to watch on this channel as a whole. So I'd say IWM, and if you look at, let's say, something like the Dow versus the Qs, you probably see something very similar, right? So red month, let's just zoom out. Let's look like the monthly. Yeah, same thing, big swing high. What about the Dow versus IWM? Same thing. If anything, an even more pronounced swing high. I mean, look at this clean uptrend that's just kind of coming to an end. And it actually is coming to an end like right within the zone of where you might expect it to, where this kind of downtrend kind of starts. So this is all telling you the Dow is the thing to kind of stay away from. And again, as we get larger declines in the broader markets, we may look to see that underperform others, right? Like so to go down more. So we'll leave it at that. Really, really important time in the markets here because we're in a place where we may have had our major low, right? We may have a situation where, you know, risk appetite for risk assets is going to increase from here, but yet people are going to be so persistently bearish. And ironically, that fuels the move because every now and then you get another person who is bearish who finally gives up and joins the rally, who's tired of getting left out of the rally. Now, we'll know if that's going to be the case or not going to be the case based on the strength or sort of shallowness of this daily cycle decline. So we'll be watching that very closely to see kind of what unfolds. So we'll leave it at that. Thanks for watching.